Hey investing friends, in this video I'll share how much our $160,000 dividend growth portfolio paid us in August. And stay to the end of the video to see what we've been up to this summer. Let's do this! Before we look at our dividend income for the month, here's what our portfolio's dividend calendar looks like. And here's what the like and subscribe button look like. You know what to do. In August, we received dividends from our 3 monthly payers. This used to be 4, but we dumped Canoe EIT Income Fund last month. What we'll do is start with our smallest dividend to our biggest, adding up the totals along the way. First, we have one of our REITs, SmartCentres Real Estate Investment Trust. We received $60.36 in distributions, exactly the same as last month. It provides us with 7.2% of our annual dividend income. SmartCentres is one of 2 stocks we own without a dividend streak going. Here is the little backstory to this. After the financial crisis, SmartCentres increased the distribution from $1.54.8 in 2014 to $1.85 in 2019. That was a 3.7% CAGR, which was respectable for a REIT. Then, during the pandemic, management decided to maintain their monthly payout instead of reducing it or cutting it. It has now been 4 years, and they're still nowhere near the point where increases can begin. Our second biggest paycheck of the month comes from our third largest payer, First National Financial. We received $70.16 in dividends, which is exactly the same as last month with no new share additions. It provides us with a substantial 8.5% of our annual dividend income. Its dividend KPIs are looking good. Its payout ratio is still a respectable 69% after second quarter, in spite of the very slow Canadian real estate market. I am expecting another dividend raise to not only keep pace with inflation, but beat it in Q3. That will bring their dividend growth streak to 13 years, with a 10-year CAGR of 5.7%. It's no wonder First National Financial has not only beat the S&P 500 in total returns, but also in dividend growth. From 2006 to 2023, the total return was 1,581% compared to 258 for the index. After these 2 paychecks, we hit $130.52. Our third distribution came from our second largest position, RioCan Real Estate Investment Trust. We're paid a distribution of $71.23. That represents, on a yearly basis, 8.6% of our dividend income. Compared to SmartCentres, RioCan has been able to raise its dividend 3 times already since it cut its dividend in 2021. With a payout ratio of 61%, we can anticipate another increase coming early 2025. My guesstimate is another 0.25 cent monthly increase, or 2.7%. CEO Mr. Gitlin has been cautious, and I appreciate that as a shareholder. Conservative growth that allows for more development and better control of leverage usually leads to higher total returns. So after 3 paychecks, our grand total is $201.75. It's nice to see the year-over-year comparison to August 2023. That year, we had $194.55 of income. So our income grew by 3.7% in our TFSA, even after accounting for the sale of EIT Income Fund. In an apple-to-apple comparison, our income grew by 17.6%, which is still very respectable. As most of you know, we're building our portfolio with a focus on the quality of the company and dividend growth potential for when we're financially free. We aim for a Chowder score of at least 12. Markets are never stable for too long. We've seen that all year long, with many days and weeks seeing a whipsaw in share price. We never want to be too dependent on any one company in the event of a dividend cut when economic turmoil hits. No one industry or stock dominates our dividend income. Our portfolio reveal the other week showed the breakdown of our portfolio by industry. You can check it out here if you like. Now, a massive part of our dividend income growth is from the dividend raises we receive. So far, we've received 12 dividend increases at an average increase of 7.4%. Last month, Capital Power Corporation raised its dividend 6%, giving it an 11-year streak. This month, we received no dividend increases. There were other notable dividend increases in the Canadian market in August. For example, Jameson Wellness raised its dividend 10.5%. That's huge, giving it a 7-year streak. OpenText Corporation raised its dividend 5%, giving it an 11-year streak. Equitable Group had a raise of 4.4%, giving it a 2-year streak. Actually, it's had 8 quarterly increases in a row. Canadian Apartment Properties REIT increased its dividend 3.5%, the first in many years. It's been awesome overall for the Canadian market this year. We ended the month with a forward annual dividend income of $10,028 with a yield on cost of 8.3%. With $47,000 of contribution room left in our TFSA, we can easily hit the $12,000 mark in forward income if we wanted to. Stay tuned to see what we do in the normally turbulent month of September. And before we go, here's a little of what we've been up to this summer. A little sneak peek into the life of Mr. and Mrs. Thank you so much for watching and supporting the channel with all your likes. Ciao for now.